Hello and welcome to Policy Watch, your packed snapshot of the week's biggest business stories, their context, their relevance and impact. I'm Govindraj, Ethiraj. Building consensus with states on a combined goods and service tax remains elusive. The Empowered Committee of Finance Ministers of states that met in New Delhi this week agreed to adopt that traders with a turnover of 10 lakh rupees register for GST. But the states were firm on keeping the centre out of audit and assessment of firms having a turnover between 10 lakh and 1.5 crore rupees and rejected the proposal to have dual control. Now, both the centre and states would have audit and assessment rights over firms having a turnover of over 1.5 crore rupees. The centre will collect central GST or CGST and states will be in charge of collecting states GST or SGST from them. The states also stuck to their demand for a compensation mechanism where both parties have equal say. They virtually rejected the centre's proposal that the matter be vested with a proposed GST council. Some states have always complained that the centre's powers within the GST council were disproportionate. States are also firm on keeping petroleum products out of GST through a constitutional provision, but an agreement on the threshold paves the way for further discussion on a revenue-neutral rate for GST, and it comes as a big relief for the Narendra Modi government that is keen on implementing the new tax system. The GST is meant to subsume most indirect taxes. To discuss this, I'm now joined by Saugata Bhattacharya, Chief Economist at Axis Bank. Saugata, thank you very much for
My pleasure. My pleasure.
Saugata, so let's talk about GST first as a conceptual challenge that we are seeing today, and then we'll try and understand what it's not being there in the way we want it to be means for the economy. Sure. What according to you is the principal issue here or challenge?
Look, I think the basic issue that the GST framework is trying to resolve is the multiplicity of tax rates, tax processes in various states. Just like we used to talk about stamp duties, which is hindering the development of the corporate bond market. On a bigger scale, GST, there are multiple slabs of taxes of various commodities. This is hampering the development of a national market for goods, amongst various other things. The other major thing that the GST is trying to address is to rationalize the cascading of taxes. So you have various inputs into various commodities. So the inputs are taxed, and then those inputs that are value added into the next stage of production of the commodities, the entire thing is taxed again. So the GST, which is a form of the value-added tax that is in practice in the European region, say for instance, many other countries, this tries to rationalize the cascading of taxes. So you can claim credit for your inputs. This is what makes goods and services more expensive than they might have been.
Okay. So one more quick conceptual question: why is it that some people, which is the states, feel that they're losing out to the centre who perhaps might be gaining?
Well, I mean, the states will definitely lose out because then there are some parts of the tax collections that they had done and that they had taken on their own books. The sales taxes that they had collected, major sources of revenues for states, that probably would come down a little bit. Remember, because the entire tax level in the initial phases, because I mean nobody is considering the elasticity of tax collections. We are taking a static look at the picture that the entire set of economic activity on which these taxes were collected would not grow because of the new rationalization of taxes. But that's something that takes a while, 2 years, 3 years, 5 years, and that's the basic reason why states are worried, because with the entire rates of taxes coming down, you stand to lose some revenues.
So obviously the whole project is facing various roadblocks. Now let's understand one thing. You did talk about a national market, and that the fact that we're not able to do this hinders that objective.
That's right.
So what's the larger impact on the economy that we're staring at, whether immediate or in the future?
Well, the larger impact, the first thing that should come to mind are agricultural commodities. Given the very high inflation and high and persistent inflation, which incidentally the RBI's annual report yesterday highlighted, emphasized. I think that's the first casualty. Forget about anything else, the inefficiencies that we were talking about.
So this is the inflation fighter that could have been but isn't.
That's right. I mean, so this is a relatively easy way of ensuring rapid movement of goods between various agricultural markets in the country.
And you feel that is an inflation contributor?
Of course, because I mean the geographic spread of inflation, they had a very nice chart. The geographic volatility of inflation actually coincides with spurts of food prices.
Okay, so agri-commodities is one. What's the other?
All other commodities. Say you want to transport goods from one state to another. Forget about all the process efficiencies, inefficiencies that we have in terms of logistical problems. You do not really know where, when you're selling, originating some product in one state and selling to the other, the two transactional parties don't really know what the pricing needs to be, because the taxes are so different. That's one. Financial products, which is very, very important. I mean, we need to get finance out into SMEs, into infrastructure, connect small savers to these to the borrowers, and that becomes a huge problem, because stamp duties is one part of this, and stamp duties is so different across states that you really don't know what the prices are at which you will sell products, and therefore a market doesn't develop. So it's typically bilateral trades and so on, which happens. But if you need to develop markets, you need to have uniformity of
right. So you're saying not just physical markets, and physical markets which in turn comprise regular goods and goods, but also agri goods, which in turn lead to inflation. But you're also saying financial products, which is not something that most people have really talked about.
Absolutely.
Right. Okay. So now let's understand the larger challenge, right? So obviously we speak of this in the context of federalism and the attempt by this government to obviously ensure that states have a greater role to play.
Right.
Now, how do we address this issue then, given I guess the political sensitivity of many of these moves, which perhaps have to be a little tougher than what we thought earlier?
I think this is a difficult question. I mean, this is what government after government has been struggling with, to be able to work together and create a mechanism in which there is some kind of a rational, equitable sort of loss sharing or whatever, cost sharing, pain sharing. I think the latest round of moves that we have seen is encouraging. We seem to be converging.
Right.
We probably should have converged even faster. But I think the issues that are cropping up and new issues are coming up, the issues of traders that you mentioned. But I seem to sense a convergence of interest.
Okay.
So I mean,
so as long as petroleum is kept out, let's agree on
on various things. Okay. The problem is because this is a constitutional amendment.
Yeah.
So I mean, you need to have a mechanism in which if you amend the tax structure between the center and the states, I mean, you need to have a process where additional changes would not have to take you back to the drawing board. I mean, there are other ordinance measure, administrative measures in which you can tweak the basic structure. So that's the framework, the legal framework that the center and the states need probably to work out.
Right. So now, how do you create then a win-win situation? At least if you were to view it from a 30,000 feet level.
Well, I mean, we hear talk that, I mean...
Or a perception of a win-win.
A perception of a win-win. Yeah. So, I mean, we hear talk of a GST type structure, adding a couple of percentage points to GDP growth.
Yes.
2% of GDP is a lot of money. I mean, even if it takes 3 years or 5 years for this 2% to kick in, that's a significant lot of money. So even if some states lose out in the near term, there is the prospect of a massive increase in economic activity, and that's the win-win situation for all of them. So the basic thing that I think needs to be done is that the center in the initial phases probably sacrifices something to the states, because in the prospect. So I mean, if you stand to really gain 2% of GDP, I mean, you can afford to compensate states for their perspective, the perception of revenue loss, even if it's not actual, the perception of a revenue loss, in the hope of getting that additional kick.
Right. So let me sort of circle back to where we started. We said that GST or the move towards GST is an important reform step in itself, an economic reform step, and perhaps a political reform step in itself, because it's a new way of center-state relationships and so on. What are the other 1 or 2 key factors that we need to look at now as we take a step back that are important economic ingredients for the kind of growth that we are looking at?
Well, I mean, the first thing obviously is infrastructure. That's been one of the reasons that our growth has stalled. Of course, I mean, there's a combination of factors: the monetary policy tightening, higher interest rates, other roadblocks, the implementation, the bottlenecks that have been created, the fuel linkages, land issues, and so on. So I think that combination to increase investment, because investment was the key source of the slowdown, that needs to be revived. And anyway, that needs to be revived. Don't forget about anything. If we need to get into a high growth trajectory, we need to create the capacities. So from that side, you need to get projects, capex investment going, and infrastructure is a key part of this.
Right.
One of the things in infrastructure that people have been talking about is the are the problems that have cropped up, at least in some public-private partnership. I'm sorry, it's a big word. PPPs that have cropped up, particularly in road projects.
Yeah.
And the Prime Minister has demonstrated and actively emphasized the need to carry on with the PPP framework. Going in from the PPP framework, the next question that needs to be asked, because this is private funding, so you need to have the funds to fund these projects, and that's been one of the major issues that's been a fallout of the economic slowdown, the very sharp slowdown in financial savings, and households contribute a lot to the savings pool of the country, because I mean, if we do not increase domestic financial savings, we have necessarily to rely on the global capital pool, and we have seen the effects, and particularly this pool.
We were just talking about it, right? The household savings component has dropped from a peak of 12% to about 7%.
7%, yeah. Horrendous drop, a 5 percentage point
and
drop.
This also in some ways links back to the GST point that we were making about creating a uniformity for
that's right, absolutely.
duty on financial
that's
products.
Right. So one of the things in financial products, you and I as savers, I mean, this is common sense. You need some degree of certainty. When I save, you need some degree of certainty. Taxes, inflation and others. So I think the savings, the certainty in savings, not from a GST perspective, I think the certainty in saving comes in essentially from inflation. That's been a real killer. I mean, you do not want to invest as to save. I mean, if you see that inflation eating away all your savings, so your real savings rate is actually negative. I'd prefer to consume in that event. So I think the need now is to get inflation down.
Right.
And to be able to encourage savings, to encourage households to save, you need to get inflation down. That's where the GST comes in.
Right. And I think we've sort of stitched it reasonably well. I mean, you need GST not just addresses the larger problem of financial savings, it addresses, if managed well, the challenges of inflation because of movement of goods, agri products particularly. Absolutely. It also creates a larger sort of healthy climate for center-state relationships, both economically and politically.
Absolutely.
We run out of time, Saugata. Thank you very much for being
brilliant,
with us.
Absolutely brilliant.
That's all we have time for. We come back on Policy Watch and we're going to be talking about the Planning Commission and what's going to replace it next. Welcome back. You're still with Policy Watch. Prime Minister Narendra Modi's announcement on scrapping the Planning Commission has triggered immense debate. Policymakers, bureaucrats and economists have speculated and commented on the structure of this new look body that could take its place. The Prime Minister has asked the people for suggestions on the shape, size and nature of this new body to replace the Planning Commission. It is well known that Modi, as the Gujarat Chief Minister, had sharp differences with then Deputy Chairman of the Planning Commission, Montek Singh Ahluwalia. But the Independence Day announcement on scrapping the apex planning body has surprised many. India's first Prime Minister, Jawaharlal Nehru, had formed the Planning Commission in 1950 for centralized and time-bound planning. The first 5-year plan was launched in 1951. Over the decades, the Commission evolved into a nodal agency for centralized planning and a platform for exchange of ideas between the centre and states. It also saw the disbursement of central assistance to states and monitored the centrally sponsored schemes. What the new body will look like, its powers and functions and its shape is something that we have to wait and watch. Joining me now, Madan, Sabnavis, Chief Economist at Care Ratings, to try and get a sense on what this new body should be and whether we should be replacing some of its functions or really building afresh. Madan, tell us.
So actually, if you're looking at the Planning Commission, it was initially set up to take care of the entire planning mechanism. Now today, when we feel that planning, these 5-year plans which we have been having is fairly anachronistic and they don't really serve much purpose, therefore there's this talk about saying let's get rid of the Planning Commission. There's probably merit in saying that we need to reinvent it. Now if you look at the Planning Commission, there were essentially 2 roles for it. One was of course the job of the planning and the second part was being a kind of an advisory board where they provided advice, their own expertise on various areas of the economy.
Also the centre state.
No, the centre state would be more in the part of the plan as to how the resources are allocated, and since we have a federal system and we have the Finance Commission which already pre-decides as to how the funds will be
For instance, in the latest budget, we've already seen over 280,000 crores being transferred additionally to the states.
Exactly. So if this is being done, do I need to have another body to do the same job? So the answer is obviously no, there will be a replication of a job, the duplication, we should probably be utilizing it in a better manner. But I think the broader level, do we need to have so many kind of advisory bodies? Because we already have the PMEAC, which I don't know if it's going to continue or not. We have a Chief Economic Advisor's Office within the Ministry of Finance. And I think almost every department has economists who are able to advise on that particular sector. So I think there's a strong case for actually transferring the functions of the Planning Commission to individual ministries. And I think we do not need to really create a new institution.
Okay, so you're saying the holistic look that someone could take on the entire economy is already being taken by some of the existing bodies, including the advisor, the economic advisor to the Prime Minister and the Finance Minister and so on.
Right.
Right. So what's the gap then that the Planning Commission could leave apart from writing 5-year plans?
No, I don't think there'll be any gap as such. Now, my only thought is that are we going to actually end up creating another institution? We have another institution.
And that's a worry as well.
That's actually a worry, because if we feel that planning is not required, and I have experts in other organs of the government, we don't really need to create a new institution. If there are certain experts whom we think we require their advice, they could always be working within the ministries, within the regulators. So I think we really don't need to go in for a new institution.
Okay, so let's come back to the operational side of it in a moment and what the new organization could be. Let's come back to the conceptual part about 5-year plans. So we are of course saying that the 5-year plan as a concept is anachronistic, right? But what could be the plan that actually looks at the country as a whole and looks at the resources, looks at the assets and says this is what the future could be like?
See, we already have vision documents. We have the political manifesto, which actually lays very clearly the direction about where the economy should be heading. We have vision documents, they'll say vision 5 years, 10 years, vision 2020. I think that's
you're saying that an economic drill down of that is not necessary?
It's not really required. Anyway, we need to do it on an annual basis, and we've seen that things are very, very uncertain. And in fact, most of the so-called plan objectives, the targets which were set, have never really been realized. And then we actually go around discussing as to why is it that they have not been realized, when it actually doesn't make sense to talk of 5 years. I think we need to have a vision for maybe 5 years, 10 years, whichever way it is.
A quick look back. Were we more concerned with the Planning Commission or the image of the Planning Commission or the actual operational role of the Planning Commission?
No, I have a feeling that it's more of the operation, because I think the Commission has...
so it's not the symbolism, it's not what it represents or it's thought to represent?
No, I don't think it's that, because I don't think anybody raised this issue for maybe 20 years after we went in for economic reforms. And now, of course, people are saying that the Planning Commission was sort of hindering the transfer of resources from the center to the states, and the states had to go to the Planning Commission regularly. And probably when they were implementing projects, they didn't really require a Planning Commission to tell them how it should be done because of the federal autonomy which was there. So I think it's more in terms of how it was operating which led to this entire controversy.
Okay. Now let's look at the operational side and what are the 2 or 3 key gaps that have to be filled. Where do we begin?
No, to my mind, I don't think, I think we have enough expertise which resides in various ministries or various regulators for that matter. So we have SEBI, RBI, all on the finance side, Ministry of Finance, you have the Ministry of Agriculture, so on and so forth. So if you actually look at Planning Commission's website and see what kind of information you're getting from it, I think it's virtually something which may probably be coming from the ministries itself and probably being reanalyzed in the Planning Commission. So I don't really think there will be any kind of loss, provided, I mean, there could definitely be certain kind of suggestions which are coming from Planning Commission, which could always come if the same personnel are sitting in the ministry.
Right. So, and the Prime Minister has already invited views from the public at large. Now, the one concept that's being talked about is the Chinese model, which is the National Development and Reforms Commission. Right. So, if such a commission were to be formed here, and there is some talk along those lines, and including the people who could head it and the people who could be part of it, what could they be doing?
So, I would tend to think that it will go back to thinking of a vision for the next 5 years to see as to how the economy should be performing, how the resources
you're saying
should be
principally a think tank?
It's going to be a think tank, and to my mind, it may probably just come back to what the Planning Commission is doing today.
Okay. So, one of the suggestions, or rather, I'm sure these are many people are suggesting it, is that it should no longer be a Planning Commission, which of course it won't be in any case, but it should be an Implementation Commission. And there is enough material even sitting within the Planning Commission to actually start picking up and converting into action.
See, that's an option, but then I don't think we're actually getting away from the fact that I have an institution which we feel is anachronistic today. Okay, forget about the planning part. Even if I'm saying in terms of implementation, finally, who's the one who's implementing things? It's happening through the ministries. So if I'm talking of an additional body which is going to help in implementation, again, I really don't see the point in having a new institution doing it.
So let me flip the question, Madan. Suppose I'm about to say that this is where we are as a country. These are our targets and aspirations and goals and dreams. What is the kind of body that best fits our needs and that needs to sort of get created and get into action quickly?
Yeah, to my mind, I don't think we're required to create a new institution. Things can be done from within the system which exists.
Okay. Because so you're saying we've done away with the Planning Commission, that's fine. fine, but we don't need to create anything more because it's all getting
exactly.
distributed.
I think that if we are ideologically feel that we're closing down the planning commission because either planning is redundant and the only reason is, but I still need the advisory part. To my mind, we don't even require the second part because it could very well reside within the government arms.
Okay, and is there something specific that you feel that a body which I'm guessing is more like a think tank, which is also doing some amount of implementation monitoring, and how could that play out?
No, actually, Govind, if you look at it, the PMEAC which exists, that was also supposed to be a think tank. So how many think tanks are we going to have? And finally, if all the think tanks are going to come up with what the government is anyway professing to follow, then I don't think we're really bringing about.
So you're saying there is scope for a think tank that perhaps thinks differently,
which has to think differently.
Okay,
but invariably,
this body may not.
No, for example, when we had all these bodies in action, and if you saw what they were suggesting, I mean, nobody was really critical about what was really happening. So maybe I'm not saying that you have to be critical for the sake of being critical.
Or they may not have been critical in public eye.
In public eye, but if you see, finally, we had the same view when the economy was slowing down. We had everybody reiterating the same view. So the government was saying it, the PMEAC was saying it, the Planning Commission was saying it. So actually, what was really happening, it was just a case of duplication or triplication of the same view, which to my mind, well, if you want to have it, we can have it. But if we're saying any additional value was being created, the answer is simply no. So even today, if I'm going to create a think tank, going by a different nomenclature, but going to follow the same kind of.
So are you saying that the critical thing is not whether there is a think tank or a new think tank or an old think tank in a new form, but one that thinks differently?
You have to think differently. That's the only way you add value.
And in a manner that is sort of counterintuitive to what others are saying or what we might expect.
Yeah, absolutely. Because Govind, if you remember when we had these various documents being brought out, you had a planning commission giving certain view. The PMEAC brought out a document on the economy. The ministry had one. The RBI had one, and almost all of them were actually saying virtually the same thing. Not to say that they have to say different, because if you're looking at the Indian economy, seeing what were the problems and what was the way out, you would end up saying virtually the same thing. Now the only thing is that if I'm trying to close down an institution because I feel it's redundant, then why should I be creating another one which is not really going to add additional value?
Okay, so
otherwise we need to predefine as to what exactly are we expecting from this new institution. Offhand, I don't think there is any kind of paucity of talent or expertise in the rest of the government arms to provide what we're going to ask for. Only then I think we should create a new institution.
Okay, right. And you're saying in any case you're quite happy with our capabilities and competencies
existing
and skills
competencies
within our system.
Absolutely.
And you're also happy that all these skills and competencies could be suitably weaved together, or a weaved synthesis could be extracted for a national view of things that are happening or should happen.
Absolutely. And in fact, we could also probably think of saying that if I'm talking of maybe 15-20 sectors which were really being covered by the Planning Commission, maybe you create a small team of 2-3 people from the existing members over there who could actually do the kind of coordination which is required.
And let's all meet once in 15 days
Absolutely.
and hammer out one sort of synthesized view on where things should be.
In fact, I think things would be probably better coordinated because you actually have people who are also implementing within the ministries who are also going to be adding to this particular policies which are being created.
Madan, very strong, useful and insightful views. Thank you very much for being with us. Thank you very much. And that's all we have time for on Policy Watch this week. We're going to be back next week, same time. Thanks for watching.